David, what do you think? Inverted curve by August, September? You freaking out?
Well, I'm certainly not freaking out about it. It is possible. I do think we're going to see some more movement upwards in long rates also, though. I mean, remember that the Federal Reserve is increasing its bond sales or reducing its balance sheet more quickly. The ECB is going to get out of the business of buying long-term bonds. So there's going to be some pressure on the long end also. So I expect the 10-year yields could rise to about 3.5% by the end of the year, and that may avoid complete inversion. But if we get inversion, it doesn't mean anything. I mean, really, it doesn't. It's, inversion used to be a very worrying sign for the economy, but this is basically a broken barometer because we've never had central banks so active at the long end of the bond market, so it's really not telling us the kind of things it used to tell us in the past.
Right, but yesterday's 30-year auction I thought was really interesting. Come inside the Bloomberg here and you can see the bid to cover ratio is the yellow line and then the blue bars, the indirect bidders. I mean, I wonder how much higher yields would be if we didn't have something like short covering, safe haven buying potentially.
Well, yes, and I mean, there's still plenty of demand out there, and people are still grasping for yield wherever they can get it. But I did want to make one other point. Suppose we do get an inverted yield curve. Not only is it a broken barometer, but it actually doesn't harm anything. I mean, it's very much a symptom rather than a disease. In fact, if you think about it, if you raise short-term rates, but you cut long-term rates, what are you doing to the private sector? You're making it easier to take out a mortgage, but you're giving people more income on those bank accounts. So actually it is stimulative to the household sector. So not only is it not a harbinger of doom anymore, but it actually provides some stimulus to the economy if those short rates go up more than the long rates, at least in relative terms. So I'm not that worried about it. I do think these are special circumstances. The yield curve will be pretty flat, but I'm not worried about that telling me anything about a recession.